Yes, guys, welcome back to the channel. Hope you lot are all doing well. I know it's been a while since I've last uploaded on here. If I'm being truthfully honest, I've just been so lazy. Um, I have been active in my Discord that I've released. I know some of you guys have asked about that as well. So yeah, I've been active there for the past couple of months, but and on TikTok as well, if you follow me on there. But yeah, on this channel, I've kind of neglected it. So apologies about that. I'm not gonna make any promises that I'm gonna upload on here consistently, but I've had a lot of requests about people asking about how I find my trades in terms of levels, confirmations, how I use options flow as well in conjunction with order flow. So that's what today's video is going to be. What I'm going to do is I'm just going to go over a few trades this week. Not all of them are wins, some of them are losses as well. And then I'll show you as well what my P&L tracker, etc. looks like off the back of that for this week as well and this month. So getting into it, I'm going to start off with how I find my levels. So those of you that are familiar with auction market theory, volume profile, etc., this is the bread and butter of how you typically would observe the market. You can kind of see from this perspective here, this is just one massive balance that price was just trading in between. So, I mean, this probably is like up 3 or 4 days. Obviously, this is split into the RTH and ETH. So, what I would typically do in a scenario like this is maybe merge all of these together to get one big composite, but at the same time you don't actually necessarily need to do that, because you could just look at this profile here on the right, which is a 300-day volume profile, and this just shows you the main belly of the distribution for the past 300 days. I recommend use 300, 200 days, just any bigger time frame above 150 days, just so you can see the main distributions over a time period. Another thing that I'd also add in conjunction with the 300-day volume profile is a year-to-date volume profile, which is just basically a volume profile from the beginning of the year, just so that that's not prone to alpha decay. As I bring this up for a second, if I unhide this, you'll see I've just got it over here. The reason why I hide this is because I just want to make sure, well, firstly, I want to make sure my chart is clean, sorry. And secondly, as well, I don't need it visually at the same time. I just need it to reference and compare it with the 300-day volume profile. So if I do this quickly, you can see here, we've got a nice clear chart. Where's my thing gone? So if I zoom out like this, you can kind of see how these distributions will sort of follow each other. Now, the reason why all of this price action or volume profile action looks the same is because obviously this is new information that's coming in as we're making all-time highs. So all of this is going to look the same. As you move lower, you'll notice that the distribution around here is different compared to the distributions around here. So if we get into the way I find these levels, what essentially I'm looking at is I'm looking to find the edges of the main belly of the distributions. I know you have little pockets of low volume within the major distributions. However, I tend to ignore them, and I only really want to take trades from the major levels. I know here, I guess I've kind of gone against that sort of saying of only looking to trade from the major levels, but I've marked this out just because I still want to find some type of fair value um, that separates sort of this cluster, if you like. So what I've just ended up doing is marking this as the top of the distribution where the volume tapers off, and this is the bottom of the distribution where the volume tapers off. I mean, I could, if I wanted to, stretch it to down here, which, you know what, I might actually do this on the video right now. Um, Maybe I just made that bigger actually. So yeah, I just mark out these two um areas, bottom, top of the distribution, and then I do the same thing as we move down here. I'd mark out this area as the bottom, this is the top of this distribution, this mini distribution, then you have this massive one here. What I've done as well, I know earlier I was saying I don't necessarily mark out the low volume pockets, but ones where the pockets are still significantly deep, yet it's not enough for me to consider it as a distribution, I would just mark it in a gray box to show that it's a low volume node on this profile. So I know that on my charts, when obviously these levels are displayed on other charts, this is a low volume node that is derived from the 300-day volume profile and year-to-date volume profile. You see here as well, you've got low volume here, low volume here, a bit of low volume here, a bit of low volume here. Really and truthfully, actually, I should color code this to the colors that I've got it set over here. But I'll leave that for another time when I need to do my charts. Yeah, getting back into it. Essentially, just looking to find bottoms and tops of distributions and making sure as well that you have a year-to-date volume profile to make sure that it is not prone to alpha decay, as a 300-day volume profile is static, so it doesn't take into account market regime shifts. It just calculates because it's based off a 300-day volume profile, so it's going to be fixed off that. Whereas a year-to-date volume profile will change with the new information, market sentiment shifts, Fed rate policies that have changed. This will do the same in the upper distribution of the 300-day volume profile, but for the older distributions lower down as prices moved up, those areas are still prone to the alpha decay. And not taking into the information that's happened earlier on in the year. For example, like here, you could see here low volume. You don't really see, you can see that here a little bit, but you can see the significance of the low volume node on the year-to-date volume profile compared to the 300-day volume profile. So that's just how I find my levels from a volume profile perspective. And getting into the other volume profile chart that I use, this is a weekly volume profile. So I will mainly just keep it very simple for the context of the video. So what I'll do is I will draw out my prior week value areas. So I'll draw out, for example, this is last week's value area high, this is last week's value area low, mark that out with a red line, and then I will just draw the low volume nodes that have derived from the previous week's volume profile, as well as ones that do occur throughout the week as well on the current volume profile and any other week as well. Once I see volume has started to build at those low volume nodes, I will then delete them off my chart because I deem them no longer a low volume node, as volume has now built up in those areas. So that's how I use the weekly volume profile. It's very simple. Look for the value areas of the previous week only. And then with the low volume node areas, I'm looking at anywhere where low volume has occurred. Once volume builds up, I delete it off my chart. That's as simple as it gets when it comes to using the weekly volume profile for my trading. We're going to get into some execution stuff. Let me go back in time and replay the charts because that's probably the best thing for us to go through. Cool, perfect. So I'm just replaying the charts to yesterday's price action. This was a win that I took. And we're gonna go over a replay of basically what I kind of want to see, my confirmations. Also, actually, there'll be a loss that you'll see before I take the win. So this will also be good to basically see what you shouldn't do in a situation. But to be fair, there's nothing really that you can say to yourself if you executed your plan and the confirmation was there and you still took the trade. There's no reason for you to really actually say, you know what, I should have done this, I should have done that. If it's your plan, you stick to it. But anyways, enough of me rambling on. Let's get into it. Price opens up from the open. You can see straight away buyers are looking like they're being absorbed. This indicator, I think I've talked about in previous videos, just showing absorption based off a pattern from the footprint that I've sort of over time noticed. So that's basically what that is. And to be fair, it would have run for a few points off the open if he was quick enough, but that's not really my style of going straight off the open. Let's fast forward this a little bit. So we get to this point here. You can see I'm ready in the trade here. I've got in 3 micros. I've got a confirmation here. If I just pause it actually briefly. So the reason why I've entered off this is my zone here, which is the edge of a distribution. Now I was a little bit, what I would say I was a bit too fast in entering this trade, only because it wasn't typically what I was looking for in terms of the structure of how price formed this signal here. So we hadn't even break and retested anything. We haven't even retested price, this zone yet. So really and truthfully, I shouldn't really have entered just because I saw the signal. The only reason why I did enter was because of what I was seeing here. You can see here large amount of negative delta towards the bottom of the bar. Point of controls also at the bottom of the bar, and price closed higher. So a bulk of the volume has transacted at the bottom of the bar. Majority of it is selling pressure that's been trapped at the bottom, and we've closed bullish. So that gave me an indication that sellers are potentially being absorbed. And obviously you get this aggressive delta here showing that there's buyers also showing interest at higher prices, which should cause prices to move higher. Soon see what unfolds is that doesn't actually happen. We get a pullback, and I end up taking a stop loss. So let's continue running this replay. You can see here now there's a bit of intent from selling. 701 delta. Price is now falling lower. If I wanted to, I could have pulled the trade out now, but if to me, I was just like, you know what? The same thing happened here where there was selling pressure coming in here, and look what happened. We moved higher. So I was thinking maybe we retest this zone of where this indicator printed and we move higher. But yeah, that doesn't happen. I'm just gonna replay this again and see this unfold. Let me just speed it up a little bit for you guys. So yeah, price is trading down. I'm still in the trade at this point. Again, you can see, there we go. That's why I exit. Saw the pressure coming in. 919 delta here, 939. I was like, you know what, I'm willing to forfeit a loss here. I know that price could pull back and retest. I'll get another entry and I'll take a small hit. And that's just a good way of managing your risk. You gotta know where you need to get out. Make sure that it's a small amount. Don't let your ego get in the way and say, oh, price might come back to my entry, blah blah blah. Take the hit, especially if you know you're on a bad run, or if you're not confident. Just take the small hit. There's no point of you trying to prove yourself right in the market, where the market is not there to prove you're right. The market there is just there to facilitate trade between participants. As we move on, you can see here, I get myself back in. I can see here, if I pause it again, we've got a decent amount of negative delta here again at the bottom of the bar. Point of control at the bottom, and you have a large, well, it's not really large, it's a fairly small large market order that's come in. I've got this set to, I think it's 40 or 50. So a minimum, if a minimum buyer basically buys 50 contracts at once, it will print that, based off obviously Sierra Chart's calculation. So yeah, that occurred right here at the same price at where the negative delta occurred. I've seen that happen as well at +1. We can see +1 is also trending up. We've pretty much been imbalanced the entire session pre-market. So I was hoping to continue this trade in the same direction. And then obviously the cherry on the cake is this zone here, which is the edge of a major distribution. So yeah, getting back into it. You can see prices just auctioning up now. I think I had a target around here, or I might scale out partials around here. The reason why I like to take partials, especially in a situation like this, is what I don't want to do is I don't want price to come up. I'm in profit and it comes back down and I get taken out for break even, and I'm still sitting on this loss from here. Like, I still want to recover what I lost here. That's the first thing I need to do, is recover my loss from here. Anything else is a bonus from this point on. I know everyone has their ways of managing their trade. You've got to find your style and what you prefer. And this is my style. I prefer to cover my losses if I've taken one before I'm taking a winning trade. You'll soon see here, I'm pretty sure I'm about to take partials shortly. This was a bit annoying as well, just price just stalling, but this is what happens when you're making all-time highs. So yep, you can see there I take partials because I didn't like seeing this stalling. So now I'm pretty much just about floating in profit, so pretty much just over break even at this point. I think we'll be able to see it, yeah. So I'm just over break even. You can see it here in the top left corner. You can see some selling pressure coming in. Let's just speed up a little bit as well. You can see more sellers getting absorbed at this bar here. Price now moving through last week's value area high. More aggressive buying stepping in. So buyers are just constantly still lifting price higher, and there's market participants that are willing to market order into the market to obviously lift price higher. We move again. I'm pretty sure I take more partials around here as well. To secure some profits. There we go. And then yeah, price just keeps trading up higher and higher and higher. I'll let this play out as well a little bit longer. You can see here more signals printing here, and I believe no, I had 2 contracts running, so I've still got a bit of the trade left. Let's see. Yeah, I've still got 1 contract running. Pretty much majority out of that position. I'm floating now 223 for the day. Looking to see if I can squeeze a little bit more. Ultimately, I think my main target, you'll see in a moment, I'm going to flip over to the option stuff to explain how I use that for this trade as well. But my main target was a major gamma wall that was around here as well. So I kind of used that as a target point, considering the environment that we was in. But I'll go into more detail about that in a moment. Let's speed this up again so that we can see the final fill. And there we go. There's the final fill. So finished pretty much that day plus 357. I think I was down at 100, if I'm not mistaken. It was a good trade. That's the type of price action that you would love to see. Whether it's shorts or longs, that type of price action is what you'd like to see. This month's been very slow, but well, when I say this month, I mean this week has been quite slow. I'll show you my stats at the end of the week, at the end of the video, sorry, so I'll show you what I mean. But yeah, not a bad trade. Very happy with the result on that one. Let me go on to the option stuff, explain my reasons for the way I use it, and yeah, go into more detail for you guys that keep asking questions about it. So let's get into it. So going into the option stuff, if I just explain quickly what all of this is, because I'm sure some of you are a bit confused about what's on the screen. So on the right side, these are all open interest levels. So this is what you typically call a call wall and a put wall. So the call walls are in blue and the put walls are in red. And then in between those call and put walls, I've also got the DEX walls, which is delta exposure. So these are color coded in their retrospective colors, sorry. So green is for positive DEX, and the magenta, you can slightly see today we don't really have that much, but here, for example, that would be negative DEX. And then moving over to the left side, you've got your gamma or your JEX levels. Then you've got your absolute JEX, which is these sort of purple lines here, and then these brighter colors that color the JEX. This is based off the VEX as well, so Vanna exposure at each strike. So levels with high Vanna exposure, they get color coded to a lighter color, as you can see here as well with the negative one here. You can't really see it here because it's covered in the coloring of my POIs, but you can see it here with the positive ones. You can see here it's a bit of a regular green. This green is a little bit lighter, and then as you move higher as well, this is more like a bluish green color as well. And then this stuff here is just information, normal information about the regime that we're in, the net DEX, the absolute JEX, the net DEX, etc., etc. And this isn't set in stone, so whenever I see this, it doesn't mean that this is going to recur, for example. It's just to give me an indication of what to expect potentially. So going into how I use the option stuff with um ES or trading futures, essentially I'm always using these option levels to see potential areas for targets and also for support and resistance. So for example, let's say I had my edge of distribution zone here and it was placed here instead, theoretically, or hypothetically I should say. That would make this level very strong for me, and I would look to fade this as price came up to it, or I would look to see if there's an aggressive break, depending on what price action I see. I'm looking for a retest of this area to also happen. so that I can take price higher. And obviously, this is all dependent on what regime that we're in, and also what order flow um, market that we're in. So if we're bullish in terms of order flow and options is also bullish, then I'm looking to see, for example, if this can be a break and retest zone. Um, if we're quite far expanded in terms of we already made a massive move throughout the day, then I might be more hesitant to look for a break and retest and look to see if I can fade this and maybe take this back down to +1, for example, or to another zone like a low volume node here. Um, so that's how I would use, if that scenario was to sort of plan out where we've auctioned all the way up here, that's what I typically look to do. Just wait for price to get to here. That's when I'll start to do my business. I'm not looking to do anything around here because I've already looked, or I've already executed all the way down here. So price, as it nears towards a core wall or a major gamma level, typically you're going to see a lot of suppression for market makers, as that's just what their obligations are. They're going to have to hedge um, and sell the rallies to basically stay delta neutral. So that's the type of activity you see as price nears a high strike with a lot of gamma exposure and a call or put wall. And then when you're in a negative regime, typically the moves are amplified. So they'll sell the price as it goes down, and they'll also buy the price as it goes up. So they basically are buying in the direction of the market. And typically in a negative regime, the market is downtrending, but that's not always the case. You do still get uptrends in negative regimes. But from what I've seen over the past couple of months, when there's a negative regime, price typically is leaning more to the downside. So if I give an example of maybe a sort of scenario that you'd want to see in a negative regime, if we use, let's say, we're trending lower. Let's say now we've come down, or we've come up to here, and prices are now starting to sell off. And you're looking at the flows as well. You're looking at net dex. You see net dex is falling. The dex ratio is now flipped from call heavy to put heavy, and obviously price has fallen at a exponential rate. Now, what I'd want to see is we've crossed the gamma flip level. We retest this area here, and let's say, for example, this strike is a little bit more filled out with negative gamma and it's moved to around here, for example. What I'd be looking to do is I'm looking to wait for price to break, retest this zone, and I'm looking for any confirmation of buying absorption or some buying exhaustion or aggressive selling, anything really to indicate that price could move lower. And then I'm waiting for price to give me that confirmation, and then I'm entering, taking that price and targeting this strike, as this will most likely be the area where price will most likely want to gravitate towards too. Whether or not I decide to hold all the way down there, that depends completely on what information comes in at the time, as price is obviously trading lower and lower. If I'm being honest, I'll probably end up scaling some of the position out, as that's my risk appetite. That's just how I trade, and that's what works best for me. At the end of the day, at least you know, if you have negative gamma around here, to expect price to obviously reach here, unless, I always say this, unless something else happens, like a news catalyst event happens, Trump says something, or there's some new information about obviously the geopolitical stuff that's going on in the Middle East, etc. Yeah, that's typically how I would use options in conjunction with futures, in particularly with ES. Um, anyone as trades other stuff like NQ, gold, um, there is option stuff for it. Obviously, NQ and ES are the main two that people probably will get options information from, but I know there's some for gold, and I know there's some for oil as well, and some other instruments, but don't quote me on that. Probably best to do your own research and find out about that. But yeah, that's just plain simple explanation of how I use gamma um, in my trades. I don't know if there's anything further that I can cover rather than that. I mean, if there is, let me know in the comments of obviously what you'd want me to go over in more detail, I'll be happy to do that in another video. Can't promise that it will be anytime soon, but obviously I can plan ahead and see when I can make that. I wrap up the video. Um, just gonna show you my P&L on my main account, which is my personal account. So this is my P&L so far for the month. As you can see, it's not too bad, to be fair. I mean, this week has been really bad for me. Um, I'd say a lot of it is just re-entering trades that are not working, not being able to sort of snap myself out of that mindset of needing to be right. Because sometimes I say to people as well, the market isn't there for you to be right, but then I end up making the same mistakes, and that's just the mental game of trading. Like you say it and you see it when you're not actually physically trading, but when you are in that moment, obviously locked in trying to trade, you forget all these things. All of these things go out the window. All you just see is what's happening in front of you on the screen. So yeah, that's what probably stuff I need to work on. Still up okay on this account that I've started, my personal account. So still floating around 936. Yeah, 50% win rate so far this month. 1.14 average win. I think this is a bit wrong. I need to change this, so ignore that. But 50% win rate, which is okay. I'll take that. That's fine, considering that a lot of my trades are hypothetically discretional, but at the same time, I'm still also using a little bit of semi-automation in terms of the alerts that I get. I'm only really taking my trades based off the way I've color coded my charts and what I was just talking about earlier in the video. These are my fills on the trades. The timing is wrong. I need to fix my journal. These trades, the time that it was executed at, are quite wrong. And then this is a thing that I've set up as well in terms of it's a discipline score based off the things that I need to work on. So wait 10 minutes for open before first trade, stayed over or under, or stayed at or under 5 trades a day, stayed at or under 3 losing trades, and no opposite trades in the opposite direction within 2 minutes of taking a loss, and doubling down on a size in terms of taking and double the position straight after taking a loss. And I'm not doing too bad on that. Typically, what this is supposed to help with is if this is all high in terms of 80% plus, it should reflect in my P&L, as um these things are pretty much things that would lead to a profitable day from the data that I've collected. So that's basically why I've set this up within my journal. You can go back to last month. Last month was really good, actually, to be fair. But yeah, this month still got some things to work on. These are the focus areas that I need to work on. And then setups. This is something as well that I need more data. So on this account only, I don't have enough data, but this just shows me what sort of pairings in terms of what confirmations, what levels, if it was a break and retest, if it was a straight rejection, what macro environment we was in when I took these setups, and it basically ranks them in terms of an A plus setup, B plus setup, C plus setup, D plus, etc. So I need more information on that. As you can see, there's not a lot of information on there on this account particularly. So yeah, this is a work in progress. Maybe in a few months' time, I'll show a bit more information on that. And this is the meat and bones of the journal. So it basically shows, if I go to month, for example, this will show all the important things I need to look at. So best and worst weekday based on P&L, best and worst weekday based on winning slash losing trades, best trading hours, overall insights, good habits, things to work on. And this is also just based on the month of good things and bad habits and things to work on. And then this is the overall one. So There's more things you can add on here. I'm still working on this channel. It's not something that I plan to release, but if a lot of people do want it, then maybe I might work something up. But if you obviously are looking to get something like this, you can just make it through Claude or any sort of open AI that you can get your hands on. I recommend Claude if you're looking to do stuff like this. But yeah. So yeah, that's gonna wrap up the video, guys. Hope you lot, learned a thing or two. I know maybe I didn't do the best explanation in this video, so just let me know in the comments if I should do something specifically, if I should focus mainly on options, or if I should focus something in terms of mainly on footprint confirmations and entries, or finding levels, anything. Just let me know in the comments down below. I've got a Discord server now as well, free to join. There's no sort of attachments to paying anything. I've even got free templates in there for Sierra Chart users only. There's some people in there that have left other templates, but that's a work in progress in terms of getting other people to share their templates. I think a lot of people in this industry or in the retail space don't like sharing templates, which I don't know why. There's no like real benefit of you sort of gatekeeping your template. Feel free to join the Discord, find some stuff in there, talk to like-minded people in there. I'm pretty active in there every day. And yeah, I'll probably catch you guys on the next one when I do. So yeah, thank you a lot for tuning in. Stay blessed, keep positive, keep grinding. Yeah, I'll catch you on the next one.